Hey, what's up, my friend? So, in today's episode, I want to share with you a few swing trading techniques that work. In fact, there is 5 to share with you. Technique number 1, right? So before we get to the techniques, right, let me briefly explain what swing trading is because some of you might be unfamiliar. So the term swing trading, right, refers to capturing swings in the market. So as you know, right, the market doesn't go up in one straight line. For example, in an uptrend, it swings up higher, retrace, then makes another swing higher, pull back, hits higher, pull back, etc. So this is what we mean by swing. Basically the waves in the market, right? So we are trying to capture that waves, that one swing. So this is what swing trading is all about, just capturing one swing in the markets. So here are a few tips and techniques to share with you. Number 1, as a swing trader, right, I want to look for a power move into a level. Let's say I want to buy at support. I'm looking for a power move into support. So what do I mean by a power move? A power move is a strong momentum move into support, right? The larger bearish the candle is, right, the better. I like to see strong, big bearish candle into support instead of a stair-stepping price action into support. Why am I looking for a power move? It's very simple. Because when the market drops fast, the reversal could be equally swift, right, in the opposite direction towards the upside. That's why I look for a power move. Instead, what I don't want to look for or what I don't want to see is a stair-stepping move into support. For example, a series of lower highs into support. When I see a series of lower highs into support, I know that that trade, right, is going to be difficult because if you imagine, right, the price makes a lower high into support, a series of lower highs, you buy at support, right? The previous swing high or all the swing high that has occurred previously, right, those are potential levels on the chart where selling pressure could come in, because after all, that is a swing high where short traders might look to sell at that level. So that is an obstacle that I have to overcome, right, as a buyer. So instead, if there is a power move, there is no swing high coming into support. The recent swing high would be very far away, right, where the drop or where the catapulation occurred, right? The swing high is very far away. So this means, right, when I trade the reversal, there's a huge profit potential for the market to swing back up higher in my favor without or with little to no obstacles, right? So the first thing I look for is a power move. Second technique to share with you is that as a swing trader or any type of trader, you want to place a stop loss at a logical level. So let's say again, you buy at support. You don't want to just blindly put your stop loss just below the lows of support. Why is that? And it's very simple. It's because that level is where many traders will set their stop loss. And what the market could do is that it swings down lower into support, take out the low, and then reverse, right? So those traders who put their stop loss just below support are going to get stopped out. And when the market reverses back in their original intended direction, they are no longer in the trade because they got stopped out earlier. So if you don't want that to happen to you, right, set your stop loss, right, a buffer below support, right? Give it some room to breathe, right? If you want to know how much buffer to set, you can use your ATR indicator, find out what's the ATR value of that market that you're trading, and then just set it like, let's say support is at $1.50, the ATR value is 10 cents. You can set it at $1.40, a 10-cent buffer below the lows of support, right? Just an example. The third technique to share with you is your targets, right? As a swing trader, how do you set proper targets? So as a swing trader, you're just looking to capture one swing in the market. So again, you want to buy support, you want to sell at resistance, right? Just capture that one swing. So a mistake many swing traders make is that they set their targets, right, at unreasonable levels, right? They set their targets, right, above resistance, right? Because they want to justify the risk to reward on the trade. Maybe they are looking for a minimum of a 1 to 3 risk reward ratio, and their target needs to be above resistance. But does it make sense? It doesn't quite make sense, because you know that resistance is an area where potential selling pressure could come in and, push the market lower. If you set your target above resistance, you are reducing the probability of you exiting at a profit, because you're putting your target, right, at an unreasonable level where the price has to break out of resistance to finally reach your target. You're making the market, right, work very hard, right, to justify your potential 1 to 3 risk reward ratio. So forget about your minimum 1 to 3 risk reward ratio and stuff like that. When you set targets, set it at a logical level. If you know that, let's say $2 is at area of resistance, don't put it at 210, 220 or 230. Instead, be conservative. Set it at $1.95, $1.90. Right? Give that market that little bit of extra so-called 10 cents, right? If you set it at 190, right? This is 10 cents to $2. Give it that little bit of wiggle room, because remember, support resistance, they are an area on your chart. The market may not reach $2 before it reverses. It could come up to $1.93, 94 cents, and then it reverses from there. That's possible. So this is why your targets, you want to set it slightly below resistance. Make sense? Next one, fourth thing, market behavior, right? As much as possible, I would say this is a bit of advanced stuff. You want to know the behavior of the markets that you are trading. So in the previous episode, we talked about Aussie Canadian being a mean reverting market. So as a swing trader, this is useful to you because if you know that, let's say Aussie Canadian, it tends to find resistance at the previous day high. You can actually look for selling opportunities at the previous day high for Aussie Canadian, right? And then possibly look to take profit, right, just above the previous day low. That's one way to go about it, by using statistics in the market to help you make better trading decisions. Okay, so know the behavior of the market that you're trading. Is this a mean reverting market that you're trading? Meaning that, does it tend to find support resistance at previous day high or previous week high lows? Or is this a trending market behavior where this market, whenever it breaks above the previous day high, it tends to continue higher? Right. So once you know the characteristic of the market that you're trading, you can make better trading decisions from there. And the last technique that I want to share with you is what I call a scale half, right half. So what this means, right, is that, let's say you are trading, you found a swing trading opportunity on, let's say, the 4-hour time frame. Okay, maybe it's a false break or at support. And on a daily time frame, you kind of realize that the market is in a volatility contraction, meaning on a daily time frame, right, the range of the candles are very tight. For the last 10 days, it didn't really move much, right? It's in a tight consolidation. So what this means, right, is that on the daily time frame, this market is about to make a big move, right? Maybe higher or lower, anyone's guess, but there's a big move coming. All right, and let's say the daily time frame is in an uptrend, so there's a good chance the market could break out higher. So on the 4-hour time frame, right, you actually got an entry, right, on the false break at support, right? So, and at the back of your mind, you know that on a daily time frame, the market, right, there's a good chance it's going to explode higher, and you still want to capture a piece of the move, right? So how do you do that? How do you kind of reconcile the difference between capturing a swing at the same time, right, not wanting to miss a big move, right, that could possibly occur soon? So what you can do is that, let's say you bought at support on the 4-hour time frame, market moves into in your favor. Let's say it reaches resistance. You can look to exit half of your position. So let's say you buy 10,000 units of euro dollar, sell 5,000 units, right, at resistance. Right, now you have remaining 5,000 units. Right, so at this point, right, the price is now at resistance. It could retrace lower, it could consolidate, go back to your entry point. Doesn't matter, right? You already have booked your profit on the first half, or rather the first 5,000 units. So the remaining 5,000 units, you want to hold it, right, and see if the market can break out of resistance and continue the existing uptrend that you have seen earlier on the daily time frame. Because if that could occur, right, that remaining 5,000 units, right, could ride, right, a huge wave of trend, right, especially if the trend now is on a higher time frame trend, the daily time frame trend. You can see that your potential profits, right, is going to be much more massive because now you're riding the wave, right, on a higher time frame trend. Make sense? So this is what I mean by scale half, right half. Okay, so this is another technique to actually help you capture swing at the same time, right, having a portion of your position to ride a trend, right? And this will really make sense, right, especially if your higher time frame is forming a consolidation in the build up, right, and getting ready to make a big move. Sounds good? Right, so with that said, let's do a quick recap, right? As a swing trader, the first thing I look for, right, is a power move into support or resistance, and then to trade a reversal after the power move has occurred. Second thing is, set reasonable stops, right? Don't set your stop loss below support or just above resistance. It makes you prone to getting stop hunted. Give it more buffer, right? For example, 1 ATR above the highs or 1 ATR below the lows. Third thing, right, set reasonable target, right? If you are buying at support and you want to sell at resistance, set it, your target just below resistance, so you have a higher chance of booking a profit. Number 4, understand the markets that you're trading. Is it a mean reverting behavior market or a trending market? And number 5, scale half, right half, right? So if you want to, capture trend at the same time, you also want to capture a swing, you can exit half of your position at your first target at the swing high or resistance and ride the remaining half and see if the market, can break out or move further in your favor. So with that said, right, I have come to the end of this episode and I will talk to you soon.